At 12.5% is now a good time to buy Bell Canada as a dividend stock. Long story short, no, I wouldn't buy it, but just watch the rest of the video. Please thumbs up the video and subscribe to the channel. This week marks 5 years on YouTube. I actually can't believe I've lasted this long. Bell Canada, Canada's largest telecom company, is struggling along with the other telecoms, but I'll focus on the other two in another video because I think they seem to be doing a little better. This one does look like it's in trouble. I was reading a Motley Fool article, I'll post it somewhere, where it was asking, where will Bell be in 5 years? If you asked me 5 years ago, I would have said it's a good purchase and the stock will be up. I always like to recommend dividend stocks that keep increasing their dividends, and Bell has been continuously increasing until this year, or just like a few months ago, where they announced they're pausing the dividend hikes. The telecom oligarchy in Canada gets nonstop government support and funding, and our rapidly growing population can continue to pay the overpriced service charges forever, it feels like, or at least it felt like. In the last 5 years, the stock is officially down over 50%. Why did I say officially? Unofficially. Just the stock price. This is just the stock price. If we account for dividends, you'd probably be down 25%-ish. From their peak in April 2022, the stock is down 57%. But look at this. Can you imagine investing in this stock for 25 years? You open your portfolio 25 years after you've purchased it, you only had one stock, and you see that you're breaking even. It's unbelievable, actually. I know there are dividends. I'm just saying this in terms of just capital appreciation. The lack of growth is insane. I never would have predicted this, to be honest. In the last 25 years, if we invested $31 just to keep up with inflation, so just to break even in terms of buying power, you would need the stock to beat $51. Not to make you feel any worse, if you invested 25 years ago, you'd be down 40%. And I know it's hard to see. This is why I tell everyone to invest in ETFs. Don't be reliant on just one stock, because look at what could happen. Invest in the overall market, or if you just want dividends, invest in dividend ETFs. I know you could be like, hey, look, this stock has been increasing for the past 20 years. I should have just bought this one, but you didn't know that 20 years ago. Look at what happened with Bell. So just invest in a diversified portfolio. Let's get into how we got here. We'll look at their financials a little bit, the comments from the CEO, and let's try to guess where we go from here. I was actually waiting until their Q4 results came out to make this video. Bell just announced a 9% reduction in their workforce, so 4,800 people getting let go. It's tough to hear and to see. You know, I'm purely blaming poor management and governance. The CEO doesn't seem like he's taking accountability. They were focused on mainstream media and radio for so long, but they've been dying for years. Here's a snippet of the CEO blaming the government for not delivering aid. It's such a cop-out. When the company is doing well, management gets bonuses and raises. It's all because of them. It's easy to make money during the bull runs and periods of growth, but now, due to poor decisions and poor management, the blame goes on the government for not giving you more aid. Is it the government's fault or the government's objective to make you money? Do you have a poor business plan or just poor management in general? If we look at some of the numbers, look at the PE ratio. The price earnings ratio is 343, meaning if you owned 100% of the company, it would take you 343 years to make your money back. So that's a little rough. I would expect this company to be around 15, so 15 years to make your money back. For reference, Google is around 25, Enbridge is around 21, and Manulife is around 15, which is where I expect a Bell to be. Now here's the thing, I'm not expecting the stock price to drop 90% to make the PE ratio more reasonable. The hope here is that earnings recover. Looking at the dividend yield of 12.6%, that's a scary one. It looks like you'll be making all this money, and then there's the fear of getting the dividends cut. But I made a video at the beginning of this channel like 5 years ago. I was saying 7 to 8% is my max acceptable yield. Anything higher gets kind of scary. You'll likely get a dividend cut and a subsequent share drop like the same day or even next day. I feel companies rarely recover from a dividend cut, and if they do, it takes a really long time. In the short term, I don't see a dividend cut for Bell. Just because the yield is high, it doesn't really make a difference to the company. Like, they're not all of a sudden paying 12%. The only difference is when they want to issue equity or issue shares. That new equity is costing them an additional 12% compared to debt, where they could probably get a line of credit for like a 6% floating rate. Dividends come when the company isn't producing enough cash to pay dividends for a sustained period of time. In the short term, Bell can recover with their lines of credit, which is not ideal, but you would hope they could make it back they can cover it from their operating cash. They're also letting go 4,800 people, which could ease the cash requirement. If we assume $75,000 per person that got let go, that's $360 million in annual savings, or 13% of the cash dividends that they need to pay. Another cash saver is the recent dividend reinvestment plan they've announced. It's similar to Rogers, where you can auto reinvest your dividends into more stock and get a 2% discount on the market price, which is great. It adds up over time, so I like it. Yeah, I only like it if I don't see a dividend cut coming soon, but we'll talk about that later. Bell should expect at least 15% of investors to enroll in the DRIP, saving them more cash. But if you want a breakdown of what dividends are or what DRIPs are, I made a few videos you could check out. I'll post the images of the thumbnail here and then the link in the description. So I mentioned that they need enough cash quarterly and also annually to pay the dividend. So how much cash are they making? Cash from operations in Q4 2024 was $1.877 billion. So that looks like 2 times their quarterly dividend requirement, which is not bad. I like that. They need around $900 million per quarter, so operations seem to cover. But a better metric is the free cash flow. The Q4 free cash flow is only $874 million. So that currently is less than the $900 million required. This isn't an issue if it's just one quarter, but the trend is the issue. The trend, if you look at last year, the cash flow was 1.3 million, so 500 million more of the dividend. Bell is trending downward, which is worrying. If Bell continues at this pace, I think, and I'm just guessing here, if they stay at this reduced and lowered cash flow for 2 years, I think in 2027 we'll see a dividend cut. They can't continue to draw on their lines of credit forever because that would increase the interest and the subsequent cash outflow. So if they do a dividend cut, the stock will take a sharp decrease and hopefully they can recover. I'm giving this company 2 more years to fix and rebuild before I can start recommending them as an investment. Let me know if you're interested in Rogers or TELUS as a, maybe I could do an overall telecom company, or if you want 3 separate ones. Let me know if you enjoy these. Thanks for watching and tune into the next one.